All right, let's talk about South Africa. Today, we're basically tearing up the old investment maps and drawing a brand new one. We're going to look past all the usual headlines about risk and volatility, and instead, we're going to deliver a strategic briefing on where the real opportunities are hiding. So let's dive right in. So, this is the big question about South Africa, isn't it? It's a total paradox. On one side, you've got the most advanced financial hub on the entire continent. But on the other, yeah, the headlines are, well, they're often full of challenges. But what if all that volatility is just noise? What if, for an investor who really knows what they're doing, that complexity is actually the key to unlocking some serious value? That's the question we're going to unpack today. Okay, so let's be super clear about this. The old way of investing in South Africa, just passively buying into some broad emerging market index and crossing your fingers, that's done. It's obsolete. It just doesn't cut it anymore in a market this complex. To win now, you need a totally new playbook, one that's active, that's aggressive, and that's powered by deep on-the-ground insight. And here is the crucial why. Just take a look at this chart. That first bar on the left, that's South Africa. Its price-to-earnings ratio is just 12.6x. Now, what that means is that it's trading at a pretty big discount compared to its emerging market peers and, of course, to developed markets. A lot of fantastic assets are being priced as if they're stuck in local stagnation. For an investor who can spot the companies with real growth potential, this creates a kind of built-in margin of safety. So, the big question is, how do you capture that value? Well, you need new rules. We're going to break down this new playbook into a really clear, actionable three-part strategy that's going to help you navigate this whole complex market. So here's our roadmap. First, we're going to talk about how you build an information advantage. Second, where you find those hidden gems before they go mainstream. And third, how to bet on the really deep structural shifts that are happening in the economy. This is the new framework for success. All right, let's jump into our first pillar, building an intelligence edge. Look, in a market where the public data is often way behind what's actually happening, having access to granular, non-public information, it isn't just an advantage, it's the whole game. This quote right here really nails it. When a market has information asymmetry, it just means some people know a lot more than others. And in that environment, success is literally built on knowing things that other people don't. So you've got to move beyond those generic analyst reports and plug into a local network of advisors who really have their finger on the pulse. Now, this table shows you exactly what that ecosystem looks like in action. Let's just walk through it real quick. See the partners on the left? You've got firms like Africa Practice, and their whole job is providing regulatory foresight, helping you see policy changes before they happen. Then you have specialists like Flex Trends, who are decoding what people are actually buying. This network gives you a multi-layered view that the big global firms just can't match. Okay, on to our second pillar. So you've got the intel. Now, how do you find the actual deals? The key here is getting your hands on opportunities before they turn into these expensive public bidding wars. It's all about finding the hidden champions. And this is where a concept like bespoke deal origination is so powerful. A firm like Ankle Capital, for example, doesn't just sit back and wait for deals. They actively go out and hunt for them in the real economy. Solid mid-market businesses in sectors like manufacturing and logistics that the huge private equity funds often fly right over. They essentially build the deal from scratch, tailoring it to what an investor is looking for. Another really cool model is the venture builder. Think of a group like the Delta. They take these early-stage startups and basically wrap them in a whole ecosystem of support. Coders, strategists, legal teams. This takes a massive amount of risk off the table. For an investor, it's like getting access to a pipeline of startups that have already been through a super rigorous boot camp. And of course, you gotta watch the giants. When a corporate venture arm like Naspers Foundry puts money into a sector, it acts like a huge seal of approval for the whole market. Their moves into areas like agritech and insurtech, that's a massive signal telling you where the smart money thinks long-term value is going to be created. It's a leading indicator you just can't afford to ignore. All right, let's hit our third and final pillar, capitalizing on the deep structural shifts. Because listen, the biggest opportunities aren't just about finding good companies. They're about riding these huge waves of change in consumer behavior and in the wider economy. And a perfect example of this is a trend that the folks at Flux Trends call the hermit consumer. It's exactly what it sounds like. The home has become the new command center for everything, for life, for work. And this isn't some temporary thing. It's a real structural shift. And it's driving massive demand for everything from backup power solutions to faster internet and home improvement. Now, speaking of structural shifts, Look at this number. Just let it sink in for a second. Negative 47%. What in the world could that possibly be? That is the drop in consumer spending on things that aren't essential, like snacks and desserts. This isn't just people tightening their belts a little. It's a fundamental reset in how people think, a shift towards what's being called pervasive pragmatism. People are being absolutely ruthless about what's essential. And if you're an investor in consumer goods, you have to understand this shift to survive. And here is where the opportunity really comes into focus. Where the state is struggling, the private sector is stepping up to the plate. The energy crisis is basically forcing a private-led transition. The digital economy needs new logistics and new financial infrastructure. Private disruptors are solving public problems, and that is exactly where you want to be investing. Okay, we've covered a ton of ground. The intelligence, the deal flow, the big structural shifts. So let's pull it all together into your new playbook with some clear strategic recommendations. Here it is, your checklist. Number 1, hunt for those off-market deals. 2, focus on tech that solves real structural problems in areas like energy and logistics. 3, use local intelligence to understand the nuance. 4, make sure your deals are structured to be resilient. And number 5, keep a close eye on the disruptors. They are your crystal ball for where future value lies. Which brings us all the way back to where we started, but with a totally new lens. For the passive, uninformed investor, yeah, South Africa's complexity is a huge risk. But for the active, strategic investor who has the right playbook, could it be that this very same complexity is no longer a risk, but the ultimate source of competitive advantage? Now that's something to think about.